In this segment, a panel discussion on the topic, once derided, now embraced, institutional adoption of digital assets. Our moderator, Renee Merkai, Standard Chartered, joined by our wonderful panelists, Alexandre Kech, Onchain, Fernando Vázquez, SBI, Digital Asset Holding, and Mark Adams, ASIC. Please enjoy the session.
Good morning, ladies and gentlemen. Thank you so much for joining us here on the Green Shoots channel. My name is Renee Merkai, and I'm really looking forward to this session this morning. I'm so privileged to be joined by Alex, Mark, and Fernando, who are all experts in the field. The topic today, which is super exciting, is once derided, now embraced, the institutional adoption of digital assets. And to get us started, we're going to go through and look at what does that mean for us, what does it mean for the state of digital assets, and how have we moved from where we were just a few years ago to the deep conversations that are happening today. To kick us off, I'm going to throw to Alex, also here in Singapore. Alex, when we come to the change in the approach to digital assets, you yourself have gone through a change from a career perspective. Has that mapped closely to what you've seen? And what do you think is the big thing that shifted so that we're now looking at large institutions having deep conversations about cryptocurrencies and digital assets?
Yeah, sure. Hi, everybody. We definitely changed my career about 2 years ago, moving from traditional banking to the digital asset world, and with the intention to actually build a company to support the institutional adoption of digital asset, be it cryptocurrency or securities token in the future. And we have seen over the last 2 years a evolution of mindsets towards cryptocurrencies and Bitcoin in particular in the institutional space. And this year, in my view, has been a pivotal year for that, with corporates like Microsystem or Square diversifying part of their cash treasury into Bitcoin specifically. I think they have shown the way for other corporates to do so. We also see more traditional funds looking at offering crypto funds to their customer base, and I think that trend will only increase in the future. As far as the adoption of other type of digital assets, such as securities token, for example, I think that will take more time because of the fact that existing securities works pretty well in terms of equities and fixed income. And the problem that digital assets solve in that space, which is solving the access to more liquid assets, for example, will still require a big mindset change on the investor side as well as on the issuer side, and we can discuss about that a bit later.
Thanks so much, Alex. So I think, but what's interesting though, there seems to be a lot of energy around this. Fernando, what are you seeing? I mean, you guys, particularly in Japan, there's been a real huge amount of activity, response to different incidents, and I think that perhaps that's forced everybody to step back and look at whether or not a different approach can be taken. What do you think about that? What have you seen, and do you think now is the time that we're going to see huge adoption?
Absolutely, especially on the institutional space. Kind of driven by as you said, these big, hacking scandals that happen in Japan. It started with Mt. Gox, and that triggered, basically a lot of activity within the Japanese government and regulators to come up with, more clear guidelines, and that were kind of imposed starting 2016 and 2017, which actually, it must sound counterintuitive. That kind of gave legitimacy, right, to cryptocurrency, and we saw the trading volumes spike because of that. But even then, the regulations were not enough, so to speak. So that's why even after Mt. Gox, right, we had these, additional issues and hacking scandals where a lot of money was lost. Not only that, the government found out that many crypto exchanges didn't actually have the right anti-money laundering and KYC processes in place, right? And we, SBI, we had our own crypto exchange. We were one of the few who were doing the right thing. And so after all of this happened in 2017, 2018, we started to work very closely with the regulators to tell them how we thought things should be done. Right? Because in many cases, this technology is so new that not even the regulators know what was the right approach. Right? In our case, basically, from the very beginning, we had a customer, investor protection as one of our, higher priority tasks, right? And we were treating all these crypto, currency clients as kind of our traditional banking and brokerage businesses. So we were following the same standards, even we were not forced to do so. And the regulators realized that that was the right approach. And so since 2018 until December 2020, we saw the regulators impose all these processes, all these regulations that we as SFF had already been implemented proactively. So actually, I think regulation is a good thing. It can actually help, the business grow because it gives legitimacy, right? Especially on the institutional side. When it comes to retail, some people might be willing to take some risk to make some money, right? The return of investment can be quite significant. But when it comes to big institutions, right, they need to understand what's the legal framework, how to assess risk, how to do the valuation of the crypto assets, right? And all these changes that have been happening for the last 2 years on the regulatory space are actually a good thing for the industry. And I think that's one of the key takeaways from my experience here in Japan.
Thanks, Fernando. It's really interesting to hear you talk about regulation there. And Mark, you obviously spend a lot of your time on this. My observation is over the last 3 years, ASIC has shown to be a very engaged regulator. But a lot of firms in this space still see regulation as an overhead. They may be a bit shy to go and talk to the regulator about what they're doing, or there's a lack of focus on that. I mean, how do you look at that? Are you having a lot of firms coming in and speaking to you about what they're doing? What are you seeing, and how would you respond to the comments from the two other panelists?
Thank you. So good morning, everybody, and pleased to be here. So I work at the Australian Securities and Investments Commission, and we are a financial services and capital markets regulator, and I coordinate ASIC's Innovation Hub, amongst other things. So to your point, my main message is businesses, anyone interested in this world, approach the regulator, have a chat, talk to them. We do so regularly because fundamental to any markets, whatever their nature, is trust and confidence, and regulation plays an important role in supplying trust and confidence. I say that against a context that, when we're talking about digital assets or crypto assets, there's a broad diversity of those, and there are perhaps tokens which are described as security tokens, and businesses want them to be regulated and to be wrapped up in the traditional markets of, capital markets and securities markets. Then there may be, for want of a better word, exchange tokens like Bitcoin and others, which are not regulated by ASIC, but for anti-money laundering and counter-terrorism financing purposes, there may be requirements that they need to comply with. So again, on that front, they need to engage with their relevant regulators in their marketplace. Back to your point, we are seeing more interest. There are more entities knocking on the door saying, we have a platform that we think we want to make available. We have products we want to make available. We have services. These are all in the traditional sort of securities world, collective investments and or trading platforms and so on. And so that's a change. I think there's still quite a long way to go. And obviously people are applying their mind, and the colleagues here are grappling with all the issues around the quality of platforms, custody and so on, and price discovery and transparency and all those topics that are relevant. I think that just needs ongoing dialogue, and I really encourage businesses to approach that in an open way and approach their regulator in an open way. And I'd like to suggest to you that regulators globally, we need to remain open-minded, and we need to be open to ideas about how the framework works and whether any adjustments need to be done. So there's just some early propositions.
Thank you, Mark. And it's, it's always refreshing to be spending time with regulators who are open. and are really keen to engage in the conversation. You know, I think we're all learning so much in this space, and it's really changed the way we think about things. To your point, you talked a bit about trust, and I think that that's quite an important topic here. And when we talk about institutional investment, whether it's traditional instruments or these emerging instruments with digital assets and cryptocurrencies, trust remains a really important element. I'm going to come back to you, Fernando. I mean, you know, where are we on that journey? Have we got trust yet, or is it still under construction? Like, where are we?
I honestly think that having, you know, the big finance, the big names getting involved is helping legitimize the whole industry and help, you know, clean the whole industry's name after, you know, the ICO debacle. And I would say the trust itself is a really important asset. Right? It has not been digitized yet, but we should underestimate the force that it has to drive the whole business. And I also say that all these big players understand the benefits of DLT and smart contract technology, right? They can bring automation, can bring process optimization, embedded compliance mechanisms, you name it. That said, we also found out that there's still a lot of old world thinking, right? That adds a lot of friction to the whole picture. And I would say that this old world thinking comes from the inertia of business processes that have been in place for decades in many cases. So basically, you need to decide whether you change your existing processes to make the most of the new technology and optimize your processes, or do you retrofit blockchain DLT technology with all its bells and whistles into the existing processes, which kind of would defeat the whole purpose, right, of introducing all this new technology in the first place. Just to give you an example, right? People do not necessarily understand what the implications of changing, say, the way settlement works are, right? The digital currency-based real-time DVP settlement may look good on paper because it minimizes counterparty risk and can help reduce settlement costs. But what happens if the underlying plumbing breaks? Who can you call at 3 a.m. in the morning and shout at? Who can you blame? What the governance model? There's not too much clarity on that front. So I would say again that more than technology itself, I think is these kind of all these processes and the regulations are the main source of friction. But again, having all these the boring guys, right, big finance, be here in the game, it brings legitimacy, it brings the trust component. And that said, they still have a lot of learning to do, and that's where incumbents like SBI, like us, basically incumbents are willing to disrupt themselves, who understand, can do the boring part, can do regulation, are willing to change processes, right, and also willing to try this new technology, right, can be the showcase of how things should be done. That said, I don't think it's only about the incumbents. I think that the startups like Alexis, who have learned from the ICO debacle and understand the importance of compliance, risk management, and robust governance, will play a key role. We as an industry should always keep in mind that we are building mission-critical public infrastructure and that the standards should be adjusted accordingly so that we can provide world-class investor protection and servicing. But the good news is that institutions like SBI, all these big investment banks are incentivized to do the right thing, because failure to do so would risk reputations and revenue streams. That's always a really nice, motivator, I would say.
I mean, that's such good points there. I mean, I really like what you're saying about the mission critical infrastructure, and we have to keep that in mind. This is not, this is not something where we can afford to have beta testers, tinkering away when large amounts of money are structurally reliant on that. So, Alex, from your perspective, in terms of building that out and making sure that is, that infrastructure is there, you guys do a lot of work in that space. How are you approaching that? And, from a trust perspective, I think that's a key focus. But what is it about the way that you're approaching things that is solving different problems, or what are the challenges you think still need, a bit more work?
Sure. So, can you hear me?
Loud and clear.
Okay. On our side, from the start, we've been building a company that is secure, obviously, insured, which is important, where the assets of our customers are insured, and compliance. And compliance is key here to build the trust. Obviously, cybersecurity is an important challenge in the crypto space. We all know that, and players like Custodians are there to support customers with the management of their private key. But it's not only about that, it's also making sure that our customers and customers in general in our industry can safely keep their assets in terms of not having a problem with regulators later. And how do we do that is making sure, obviously, that they are properly KYC'd before they onboard, that they're not dealing with counterparties that are on sanctioned lists, that we monitor properly the blockchain for all transactions to ensure that they're not receiving assets from an address that has been tainted, either because it's part of a sanction list or because it has directly participated into a hack, for example. It's also now implementing the travel rule, which is a requirement by the FAT, well, the recommendations by the Financial Action Task Force now being put in regulations in many jurisdictions, requiring virtual asset service providers, so institutional grade company like us servicing customers, to exchange beneficiary and ordering customer information with other virtual asset service providers. And this is being put in place, obviously, to avoid money laundering and financing of terrorism and other criminal activities. And it's really by building all these, by putting all these blocks together, security, insurance, compliance, full compliance to regulation, that a true institutional adoption of digital assets will take place. And of course, obviously, as startup, we welcome collaborations with established institutions. We are in discussions with a few banks to support their needs in that space. We also have as customers licensed trustees, for example, using our services to serve their customers, because that trust is progressively being settling in. And as I mentioned, this 2020 years would be remembered as a pivotal year in this context.
Yeah, it really, so it sounds like, the key topic here is that, once derided, now embraced, we are seeing this as a turning point for institutional adoption. I guess from a regulatory perspective, Mark, a question that I've had is, if we see this adoption and we're seeing a lot of new infrastructure being built, what does that mean for you as a regulator? Is there anything that makes your job as a regulator easier about these new technologies, about these new asset classes, that perhaps is complicated in the existing infrastructure? We've seen lots of regulators apply enforcement actions over lapses in financial crime controls across both traditional and new institutions. Is there anything about this that makes it easier, or is it just more of the same? What do you think?
I think it's a bit of a combination. So on one side, I'd like to suggest, and let's just take security tokens as an example, but they're an illustration more broadly. There are well-held principles that apply to the operation of financial markets, which apply to platforms, clearing and settlement, and all intermediaries in the chain. And those principles, I would like to suggest, are flexible and functional in their application. Now, obviously, when it gets into the details of those in each jurisdiction, there may be points of issue which come up against the context of what's being proposed. But the fundamentals, I think, are in place, and those fundamentals have adapted for all forms of technological applications over the decades. So on one score, I stay positive that those fundamentals remain true and can be applied to these developments in the DLT blockchain environment. But at the other side, I pick up the points of both Alex and Fernando. These whole markets have aspects of them which are new, how they operate, the features of them. So this is where I also pick up on the optimism of, well, let's talk. Let's keep talking to each other, engage, share, and help people to understand the issues. So I think that's the second element of it. I know in an earlier conversation preceding this, we were talking about where does the risk lie? And that was picking up the point of Fernando and Alex as well. I think that's really important for the trust and confidence in markets, that it's a fairly well understood concept by all participants about where risk lies. And that is both about the infrastructure as well as the product itself. And that is maturing. And I think that is, again, an area of ongoing dialogue and understanding, so that is better understood by participants. So,
yeah, thanks, Mark. Fernando, you've got your hand up. Jump in. But one question: in your response, Mark picked up at the point that about the differences, and it seems to me there's a couple of landmines. And so, in your response, if you don't mind covering up perhaps some of the things that keep you up at night about what could go wrong. But go ahead. I don't want to interrupt your stream of thought.
Yeah, absolutely. I want to tell Mark that actually, DLT technology can be a good thing for regulators. It gives more transparency. Things like the travel rule that Alex just mentioned enables you to basically track the movement of all the assets, right? And do that in real time. It's not a end of day batch job or a model report that you're sending to the central bank, right? You actually know what's going on. And so one of my points is that this new technology is going to benefit not only the potential investors, institutions, but also regulators themselves and the government, so to speak, right? So I think that's good news, right? And what keeps me up at night when it comes to the cryptocurrency, as opposed to security tokens, right, is hacks, right? Especially the more successful you are, you become a bigger target. So all the bad guys come after you, right? And as Alex says, cybersec is really important. But basically, I had to design the whole thing under the assumption that eventually we will get hacked. Everyone tells you that their cybersec is perfect. They are lying to you. That's BS, if you know what I mean, right? So basically, what you need to do is to minimize the impact whenever, in case of an attack, right? Even you get this part gets compromised, you know that all the rest is not affected, or you can quarantine a small part of your subsystem. It should be the zero trust, the mindset, and that is key for me, right? And also insurance, as Alex said. One of the first things that I did after I developed in-house my own custody solution was to work with the guys at Lloyd's of London and to get enough capacity for all the assets that we have under custody, right? But shit happens, always will, right? So there's no such a thing as perfect. So to be able to sleep at night and keep my wife happy, I got insurance, right? When it comes to security tokens, that's different, right? Because you can rely on settlement and you can kind of roll back transactions. When it comes to cryptocurrency, the transfer of value is immediate, right? So there's no going back, right? So that's it in a nutshell.
Mm-hmm.
So Lloyd's gives you an undo button.
Yep. I don't need more white hair, so this is.
Alex, for you, I mean, what do you see as, what are the potential landmines that you think could come up? What are some of the things that worry you? What are the things that you are actively exploring with regulators to try and understand ahead of time?
Well, beyond what has been already shared, there's also the human aspects, because hacks often are in silos. So I think it's important to have a proper operational framework in place to ensure that not enough people have access to not enough information to do harm to your setup. So that's also as critical as technology, to be honest. So that keeps me awake, although we have a great team, obviously, and they all screen against any criminal records before being hired. But I think it's a constant activity that we need to do. And on the regulatory side, I think what we've been trying to do is federate our efforts into industry groups such as the Global Digital Finance, of which I'm co-chairing the custody working group, for example, with ING, really to do advocacy, not lobbying, advocacy, explaining, okay, this is how our business is working, this is where the difference are compared to more traditional banking and capital market, this is an area where a regulator should be more attention, and areas where they can put less attention, because the risks that exist in the capital market does not exist, or exist at a lower level in the crypto space, for example. I don't have any specifics, but I think the idea is really to answer Mark's invitation for dialogue, is really to contribute knowledge, information with the regulators to ensure that when they do regulate, like in Singapore with the Payment Service Act, they do that in a way that is bringing security for the consumers and bringing security for the financial system as a whole, while keeping the right energy for innovation in place, and allow us to try things as well, because it's still a very new industry, and we still need to be able to innovate without having to be a 5 million, 10 million company to do so.
Yeah, thanks, Alex. I think that's really important, and that innovation is critical. And one of the things that can often help ensure innovation moves in the right direction is, being very clear around the guiding principles around what we're trying to achieve. Mark, you spend a lot of time on innovation. You talked a bit more about, the regulatory principles that we use, particularly in a capital markets context, around the different types of investors that we have and those kinds of things. For those in the industry who are working really hard to innovate, what are what are 3 principles you'd like them to really focus on as they're engaging in this space?
Right. So I think I'd be encouraging businesses to be informed, do a little bit of legwork, get on top of the subject matter. So talk to the regulator as though, oh, I'm aware of some of the issues. I may not be on top of them all, but that really helps. You've gone some part of the way of trying to understand the challenges, and there be a more open and richer conversation. So I think that's one suggestion. I think the second is, I probably wouldn't assume that, hey, the regulation shouldn't apply to me. So I would start with the premise that, hey, there are some pretty well generally understood regulatory principles here. How do I work to fit with them? Where are their pain points and challenge points? And then I suppose the third one, which connects to some of the things which have just been mentioned, is, well, what's the business model and who are you targeting? And what's the intent? Because it may well be in this maturing of these markets that there's particular kinds of investors that really shouldn't be the focus of attention at the moment. And I think our colleagues here have been talking about institutional or high net worth clients who have to also be wary about risk, but then not necessarily retail clients. And I think another challenge area will be prudentially regulated bodies and their capacity to take exposures in crypto markets. So I suppose I'm just thinking, think about the model that you're planning and whether it's in phases, so that you can get runs on the board and sort of prove the concept so that it can be broader. So they're 3 propositions for entities coming and approaching regulators.
Thanks so much for that, Mark. Fernando, what's your as we're coming up to the end of the session, what's your key piece of advice for innovators in the space?
People tend to blame regulators for everything, right? But I feel like for people like René, who work, in big organizations, and that we are trying to kind of disrupt from the inside, right? Also, usually you get a lot of pushback from other departments, right? Could be back office, middle office, risk management, you name it. So I think we should do a better work of working and engaging with our partners, right? Within our respective, entities, so to speak. Because you need to understand that this all this baggage from decades, all these processes that have been set in stone for many, many years. It's not easy to change that. And, I think we should be working with them in a better way.
Perfect. Thank you. And Alex, you've also, got a few battle scars from the work that you've been doing. For those who are enthusiastically focusing on this space, we've covered quite a lot of ground here. We've covered adoption, we've covered hacks, we've covered regulatory engagement. Definitely spent a bit of time on the FATF recommendations. But at the heart of it, I think we've all been very nice and very agreeable here. What's your key piece of advice that you'd like to leave everybody with?
Well, I guess it's a message to all crypto players out there. Don't believe that as Mark said, you will be able to avoid regulation and avoid this and avoid that. Try to avoid. I think it's more about discussions with your peers in industry groups, like I shared before, and with the regulators. I don't think it's worth believing that your activities will not fall under some regulation at one point, even if it does not exist yet. So keeping that in mind, meaning keeping the principles of regulation, which is most of the time consumer protection and avoidance of criminal activities. If you have those two basics, and risk, obviously, if you have those three basics in your head, when you build a product, when you build a technology, an operational setup, I think you're already in a good shape, even if at that time the activity you do is not yet regulated. Like this, at least you have a base that will enable you to go into a licensed type of activity without having to reshuffle and break everything down and start from scratch.
Yeah, great points, Alex. I think that's important. So thank you all to all of our panelists for this session. I mean, you've all been sharing some really brilliant insights. To summarise, I think what we're saying is it does seem that right now is the time for the embrace digital assets at an institutional level. Do it with regulatory engagement, be mindful of your cybersecurity requirements and the broad mantra that we're building mission critical infrastructure. And most importantly, the payoff for creating that environment for institutional engagement will ultimately have such a massive upside for the overall industry that it's really worth putting in the hard work. So, gentlemen, thank you so much. It's been such a pleasure to be in your illustrious company, and I look forward to the next time we get to speak. Thank you very much.